Hi folks, Dave Evans with Evans Financial Group here, and I wanted to talk about some bullet points and three important features of what's going on in the market relative to volatility in the market, because certainly we have experienced some of late. I want to bring up that between 1950 and 1920, we have had over 36 corrections in the market. Now, generally when there's a correction down, and we're in a bear market, that means the market's down, then we're going to have a comeback and recover from that. So history tells us that when we have a downturn, that we're also going to have an uptick following that, and generally it offsets it. There have been numerous crises in the past, and some of you may remember October 19th of 1987, that was Black Monday. Interestingly enough, while that was a devastating day in the market, by November and December, the market had rebounded significantly and offset some of the losses that happened during that time. 1990 to 91, Iraq invaded Kuwait. That affected the market, and then leading to U.S. involvement. We had 2000, the year 2000, and we had the tech bubble burst, and then we had September 11th in 2001, and really in 2000 to 2001 and 2, there was a significant drop in the market, and many of you remember, because this is of late, in 2008, the market dropped significantly, and it dropped really from, I think, about October of 07 all the way through March of 2009, and I have to laugh. I had a client one time said, you know, I was with so-and-so, we'll say Bob, in 2008, and boy, my investments were doing poor, and then I changed to Sam, and I moved over here in 2009, and he did a whole lot better. It had nothing to do with the advisor. It had to do with what was going on in the market, and we were going through one of those dips, or volatile times, and it was a financial crisis, and we had the mortgage debacle and so forth. In 2018, we had trade wars with China. So volatility is going to happen. And unfortunately, today, this year, in 2022, we're in one of those times. Timing the market, I can tell you, generally does not work. It's very difficult, and most firms, like ours, are not set up to say we're going to buy today and sell tomorrow, and we're going to try and time the market with your money, because it's literally almost impossible to do that. So, and when you get out of the market, if some people try and panic, if you will, or they do panic because they see a downturn in the market, or are looking at their statements and it went down, and they say, okay, now I'm going to get out, then they end up missing the uptick in the market that immediately follows. I'm reminded of March of 2020, when COVID shut the country down. And for about 22 days, the market dropped about 30%. It was incredible. But amazingly, if you hung in there and stayed, then the market came back. So by the end of the year, you had all that money that you lost back and then some. So it was really a positive year all in all. But that panic could have happened during that time period, and we need to learn from the past. And here's some things that we could recommend. One is, you could think about rebalancing your account. Check with us or your financial professional to make sure that your portfolio is spread out, diversified, and balanced based on your goals and your risk tolerance. That's very, very important. The second thing is to refocus and not get distracted from your long-term goal, because we've had a hiccup in the market, and that's what we're having today in 2022. And when you look at your statement, it's kind of frightening to see a downturn or a loss, and you say, what do I do? Shall I get out? Well, if you get out, then you're going to miss, again, the uptick in the market. So it's important that opportunity does exist even when they're volatile, but sometimes it involves, I'm going to call it white knuckle investing, and staying the course on your original goal going forward. And then to reaffirm And you choose and establish your long-term goals for a reason. And are they still working for you? And does your financial plan still match and be in concert with you working towards your goal? And these are all extremely important points to think about in the process when you look at your statement or you hear, I'm going to say, noise on TV about what's going on in the market and recession and so forth. So we're here for you. If you have concerns about your account, please give us a call and we'll set up a time to either have a dialogue on the phone or in person if we'd like to do that, because we're here to serve you. That's our goal and our focus, and we want to do that. Our number is 629-4854 here in Shreveport, and we'd love to visit with you if you have concerns. And we'll be reaching out actually to our clients that have, whether they have concerns or not, just to touch base, because we think it's important that we have a dialogue with them, especially during difficult times. Again, my name is Dave Evans with Evans Financial Group. Thanks very much. Have a good day.